Good afternoon, everyone. Jason here. Today is July 19th, and this is your aftermarket update. All right, so we've had two winning days this week, and today was a losing day. You can see here from the P&L up there on the price ladder that we had a losing day today. We had 47 ticks down today. That happens. That's part of trading. And I did want to come on here. I haven't done any videos in a while, and we did have two winning days this week. I got a little bit busy. Couldn't share those videos with you, although I did make the video. I just didn't have time to get it all sent out and distributed. But I did today, and the reason I'm putting out a video today is we had a really interesting discussion in the trading room today about winning and losing. It just happened to be a day where we lost, and I thought it'd be appropriate. In fact, I was asked by a few of the group members if I could record this session. If I asked if I had recorded it and if I could like represent it again, because they felt like there was some decent information in there. So we had a losing day, and I wanted to share that with you. Basically, what happened to me today is I had a trade plan short idea if the market rallied up to 47.35 or higher, and it got to 38, that we were going to look to get short. And you see that it did right after the inventory number here today, 47.38, came all the way down to 46.79. And if you were in the room with us today, you saw me try to get into that, and basically it left the train left the station without me. And then I tried to get short again, and I tried to get short one more time, and I got two stop outs, and then I had a short, one last short that took me out right up here at break even right before it came down again to 02. I was short up here at 22. My stop was at break even at 22. It came out, took me out break even +1, and then sold off down for 20 ticks. I could have made most of today's losses back. Had we hit that triple bottom, I would have been able to get out. I would have been able to cut that loss in half, but I didn't. And that's the way it goes, right? So our trade plan today had me looking short. You know, if you were in the room, you remember this, had me looking short. There was a really nice long trade, really good short trade that occurred, and it missed me, and then I tried to get back short again, and I got smoked, right, a couple times today. I had a losing day, and so you can see that losing day here scheduled, or shown here on your price ladder, $470, right? That happens. That's part of the program. It is part of trading, and sometimes, again, like we talk about, that's kind of the way it goes. So anyway, the other thing that I want to talk to you about today is we had a really good discussion in the trading room. I got asked, it was about an hour-long discussion. We were waiting for the crude oil inventory report number to come out, and we had about an hour-long discussion on lots of different things about psychology and the way my approach to looking at the market. We talked about we went through a good, solid discussion on the OTG risk analyzer and how you can use that to really better identify how your trading system is performing and why asymmetrical returns are so important and why you need to figure out a way to make those work. Like I said, this is about an hour-long discussion in this area here, and we spent a lot of time talking about losing and winning. And, you know, we had two winning days this week. I made two videos, and so we just basically, we're still up nicely on the week, even after today's 47-tick loser. I'll share those videos with you as well. And links in the email that I send out. I'll share those videos with you. So anyway, it's about an hour-long discussion. So of just all things risk-related and trading-related, and just kind of some of my insights and philosophies. And like I said, I was asked to record it and save it and send it out to you. And so here it is. So without further ado, here is the discussion that we had in the trading room today about risk and all things OTG. Michael, how does the 1030 report affect your point of view on Wednesday? Well, so that's a good point. That's a good question, Michael. So here's the answer. Anything related to fundamentals, housing reports, non-farm payroll report, today crude oil inventory report. I learned long ago that I don't have the resources that the quote-unquote big players have to be able to analyze and interpret the nuance of every one of these reports. And so I gave up trying to do that and trying to trade based on what I thought the report was going to say, etc. And so all we do for any of these types of reports is just let price action be our guide. We have technical areas on our chart that we look at as specific points of potential interest. We call them decision points. Once we arrive at a decision point, we then begin that process of determining what the decision is going to be. Is it going to go long or short, depending on what area we're in and some other factors that go on, including current structure and order book and those kinds of things. So I really don't have an opinion on numbers when they're released, right? Because what I know this for certain. If I'm competing against the likes of Goldman Sachs and, Chevron Trade Desk, Exxon Trade Desk, used to be, these bigger players, in other words, if I'm competing against them, I don't have the same resources for fundamental analysis. And so it's kind of pointless for me to focus my energy on that, because even if I have an idea, I may be wrong, given that there may be. So let's take this as an example. So here's a really good example of what I'm talking about yesterday. Okay. There was an expected drawdown at the API report yesterday. Okay. There was an expected drawdown on the API report. This bar right here on your 3-minute chart, even though there was a build, we are rallied now off of the low of this bar, right? This was just jammed down your throat, right? And so what you don't know is why it behaved like this. I don't know. I just know that it did behave like this. And I just know that I stand clear until I can get a good sense of what the direction is going to be on these major type events, right? But what I know for certain is I don't have the same technical staff on board to be able to analyze some of those ideas. So I just let price action dictate what's going to happen and kind of go from there, right? That's kind of what I look at. All right, Sandy says, can you apply the level logic to DAX or the buns? You can. Hang on a second. Hold on just a second. I got a frog in my throat. Hold on. All right. So the question is, can I apply these to the DAX specifically in the boons? Well, so Sandy, here's the answer. These are specifically designed for markets that have a discernible open and close, right? And I know DAX does. I'm not sure about the boons, but I know the DAX does. But there are guys in here that trade other instruments that can that have adapted the measurements and the cycles and those kinds of things to their specific instruments, right? So, yes, in short, you can apply the logic to other markets, including those that you mentioned. Okay, so let me keep going through the questions here, Rajesh. How is Bookmap beneficial in your trading? So if you look at it from a decision tree perspective, Rajesh, I have a way that I make decisions, right? And it starts at the top, which is, what is the direction of the market? What am I expecting to have happen today? So today on the CL, I'm expecting choppy sideways conditions. And so that tells me that I need to sell rallies and buy dips off of known decision points, right? And so as we approach a decision point, that I'm going to be looking to sell off the rally or buy the dip, right? And so that's what choppy to sideways conditions tell me on a day like today. Now, sometimes, right, chop can go into breakout, and if you're not quick to adjust, then you can have a problem on a particular day, and sometimes I do, right? It's just the way it is. Then the second step of the decision tree is to identify the decision points on the chart. Where is the market going to be making decisions? The first two of those ideas that I just described to you, those first two ideas are very objective, sorry. There's not a lot of guesswork, right? We'd all agree that was a support resistance area at 72. That green band that I showed you is also a support resistance area. And so we'd all agree that that's objective. Where it becomes subjective is trying to determine how to get into the market. And so one of the tools that I like to use is the Bookmap. It I like to find out where the liquidity is around my support resistance to make a determination of what the market is trying to do. Are they trying to keep the lid on it? Is there going to be support coming in underneath it in the form of liquidity? What is happening around my area? So as a fade trader, I like to fade these levels. So my first instinct is to look to get short, at least initially, from a reaction point off of a support resistance level. Now, there's other ways to go through it. I'm just kind of giving you the high level perspective. So right now, that daily structure signal at 79 is a resistance area above us. And if you look at what's happening in terms of the pool of liquidity around the book map there, you can see that 79 had some liquidity around it. But here's another clue as you're looking at this particular book. So let me expand this out. You see this liquidity that was down here, right here around 74. You see how it began to follow it up, 75, 76, and now you're testing through it here. So you've got real bands of support resistance around this area here right now. And 77, yeah, this has stopped moving. I've got to get back in with, there we go. Now it's back kind of operational here. Anyway, you've got this support underneath you here beginning to develop. Like I said, this is an indecision area here for me because I have a short idea. There's also a long idea going on right here. It's also crude oil inventory reports. So when I'm indecisive like I am right now, then I stand back, right? And that's how I begin the process of using that order book to kind of help me sharpen the pencil on when it is that I'm planning on getting in. Now, because of the way my style is, okay, you're going to have losing trades, right? Because you're interpreting at a decision point what's going to be happening with volume, etc. Okay? So there are going to be losing trades that go on. But like we discussed yesterday, if you are maximizing your risk-reward ratios, if you're maximizing your risk-reward ratio and you're cutting the losers short and letting the winners run, and that's what you saw in here yesterday, I got at my initial stop, a trade that I took got stopped out by a single tick. Went up through my stop, took me out by a tick, and then ultimately fell apart down to where I was looking at. Because my stop is so tight, because I like to cut the losers short, let the winners run, then that happens a lot around these levels. You'll get in, you'll get stopped, you'll get in, you'll get break even, you'll get in, and then it'll go your direction. That's the nature of interpreting volume. That's expected. But what you do, though, to mitigate that idea is then you begin to really get aggressive with your profit targets. And so one of the things that we talked about yesterday is, and you know, I see a bunch of other questions, by the way, in the Omnovia room, so I'm going to get around to all these. So if you're a new person in here today, not if you're a new person, because if you're a new person, you wouldn't have a computer yet. But I'm bump, right? But if you are new in here today with us, one of the questions I like to ask is, when you are in a winning trade, do you take some off at target one and let the rest run? And for the most part, I would say people in here will say, yes, I do that, right? So just a quick show of hands if you're new in here today. And I see the CL moving. There's not much for me to do here with it. It's in an indecision zone here right now, and there's just not much for me to do with it. But if you are new in here today, how many of you like to say, okay, I'm in a trade, I'm trading, we'll take 2 lots as an example. I'm trading 2 lots, I'll take one off at 10 ticks, I'll let the other one run. How many people do that? Just if you're new in here today. All right, so there's a few in here that are saying yes in the GoToWebinar. What about Omnovia if you're new in here? How do you guys do it that way? Can you hear me in Omnovia? Let's start there. Wow, thanks, Ray. Okay. couple yeses over in Omnovia. Yeah, a couple yeses. All right. All right, KC doesn't scale out. All right, so very good. So here's my point to this, and so I guess we're all kind of in the same kind of mode as the market is, just kind of relaxing here today. But the point of that is this: if you are taking one off at 10 ticks and then letting the other one run, the question I ask you is, do you scale out of your losers? Right? Do you scale out of your losers? So if you've got a 12 tick stop, do you take one off at 5 ticks and then let the other one run to the loser? Probably not. Most people don't do that, right? Most people will take the stop all the way to the end of the line, right? Most people take that stop all the way to the end of the line. So really what you're in essence doing is when the trade is going in your favor, you begin to mitigate the win. And when the trade is going against you, you say, I'm willing to take it all the way to the stop. I'm willing to ride these 2 lots, as an example, all the way to my stop. Well, if you think about that, how much sense does that actually make? But you're not doing it because you don't want to run it to the target, right? You're not doing it because you don't want to run it to the target. You're doing it likely because you don't have a target that you know how to get to, right? You have an idea, but you don't have the confidence to sit and hold with it, right? You don't have the confidence to sit and hold it until it gets there. And that's what we try to do, right? So if you start this decision tree, and this whole conversation started about how do I use Bookmap, the decision tree is determine the direction of the market, identify your decision points, get into the market, and hold on till you get to your target. The only way you can get confidence in that target and hitting there is you're interpreting order flow, but you've seen it happen a bunch, right? That is what you're trying to do. You are trying to get it to hold on to a target, and once you get the levels in place and once you get the information in front of you, that is where you are best served, right, to be able to get ahead in the long run. I ran through the spreadsheet yesterday. I'm not going to do it here today. But the point of all of this is that our overarching theme to all of this is to protect your capital, right? Cut the losers short, let the winners run. Get out when it's not working. Stay in when it is working. And try to hit those asymmetrical returns, 2-to-1, 3-to-1, 4-to-1, or higher. That's what you're trying to look for. So anyway, Rajesh, I use that Bookmap tool as part of that decision tree in the third area to be able to kind of get to an idea of what is the market telling me, right? And sometimes I'm going to be wrong, right? Sometimes I'm going to be just flat wrong, and I'm misinterpreting it, or I am, it's just not doing the thing that I expect it to do, and those are losing days. But when you are winning, and the last couple of days I've shown you this, if you tenaciously hang on to your targets, then it wipes away all of the problems that you've had. One last thought on that topic. Again, what a lot of new traders do, and I'm not saying you're new, I'm just telling you what new traders do. What a lot of new traders do is they'll have a small winning day, a small winning day, a small winning day, a small winning day, and an oh shit day that wipes out all of the small winning days and kills and crushes your win streak. So you could wipe out 4 winning days with one oh shit day, right? And that's the opposite of what you want to have happen. No kidding, Jason. Thanks, Captain Obvious. But seriously, that is the opposite of what you want to have happen. What you want to have happen is, okay, I lost, and then boom, I had a huge winner, right? So an example of that is I had a $1,600 trade on Friday, July 7th. That video is on the website. Then I had some losing days that went along with that right after that, okay? But because I had a lot of room to play with a $1,600 winning day, I had a lot of room to play with. I don't want to lose, but because of those ideas and because of the way that we are trying. You're letting the winners run, so you're not having one winning day. Sorry, you're not having one losing day erase all of your positive wins, right? And that's kind of the idea. Anyway, okay. Let's see. Okay. Let's see. We keep going here. Let me just get through some of these. And I see both markets rallying here. I'm just, again, the ES just right now, it is moving up. And you're sitting right here on your daily structure target, right? You came up into that daily structure target, but I'm just kind of sitting here with it. And I was talking through some of that, but I've got my eyes on it, right? I've got my eyes on it. So the CL, meh. The ES, meh. Just right now, I'd be interested in that trade plan idea on the up here on the CL or ES rather. Your trade plan idea right now is to let it go up through the break point up above, which is at 2469-ish, somewhere in that area. Let me just double check here. 2468. Have it rally up above that, then come back for a sell-off, or right here where we are at 2464 quarter is the high, and then come back and sell off underneath our center point. That's another idea as well. So in the interim right now, I'm not doing anything. Thanks, Michael. I appreciate that. All right, let's see here. Steven, okay. Tom says he does if he's trading 5 contracts. Okay, you don't scale out, KC. Awesome. Alex says he scales off. He says he scales off and out when he's in a losing day. That's an interesting idea, Alex. We could probably talk about that sometime. That's an interesting idea where you're trying to claw back. But again, the same question, and there's no right or wrong here, right? So, an interesting point to that question would be, are you scaling out when you're losing to mitigate the losing? You're mitigating the winning when you're right. Are you mitigating the losing? Are you scaling out when you're losing? That's just an interesting thought. So anyway, like I said, here's the overwhelming thing to all of this, or the underlying thing to all of this, right? The underlying thing to all of this is you've got your personality you've got to deal with, okay? So I have my personality, you have your personality, and you got to deal with your personality. So this is another reason why, and I'm not going to get into this topic, but we don't publish results, okay? And one of the big reasons is my results will never match your results for an infinite number of reasons, but one of the big reasons is our personalities are different, okay? So if all you do is come into a trading room and you say, I'm just going to follow the leader because he's a professional trader, he's running a trading room, well, you have no idea what my personality is, right? There was a trade yesterday that went from 76 to the 40s, back up to 73, back down again, back up again, back down. Eventually, I get trail stopped out for 22 ticks or whatever the number was. Okay, that may not fit your personality. You may say, "Ugh, I can't stand to see." We had a guy tell us this yesterday, right? We had a guy tell us this. Man, you're just not for me because I can't stand to see a trade go 20 ticks positive and pull back to +3. I can't take it. Okay, and I get that. That's my personality says, and my confidence in my system and the way that I calculate targets and levels and all of that. It allows me to do that. It may not allow you to do that. Right? Your personality may not allow you to do that. So just the very nature of that is going to cause us to deviate from the end result, which is why we don't publish results. It's one of the reasons why we don't publish results. Because what we do try to do, though, is through the course of daily trade videos, running the training room, doing these kinds of things, the reason that we do all of that is because that's really where you need to make, those are your decision points when you're purchasing a system. Beyond the fact that if I told you and gave you a spreadsheet with a bunch of results on it, you wouldn't be able to verify if they were real or accurate. And the bad guys in the business give you that stuff and hope you believe it, and sometimes you do, and it's just bogus bullcrap, but you've already spent the money, right? What you're doing when you're in here what you're doing when you're in here is you are evaluating whether or not what you see and hear is applicable to your particular personality type. Do I like the support and resistance stuff? Do I like what he's saying? Does the analysis speak to me? Does it make sense? Is it where I want to be? And then the guys and gals that are most successful in here take all of that information and they distill it down into their personal trading style. So again, this is not the first room that many of you have ever visited. If it is, welcome to Day Trading, and we're glad to have you here. But for the most part, this is not the first place you've ever been. And so if you've purchased, and I see both these markets moving up, and I'm talking through, I'm likely, like I said, I'm waiting for the trade plan idea on the ES, and I am waiting for, probably at this point, I'm waiting for the inventory number on the CL. So this is a perfect time for us to just sit on the front porch and whittle our sticks, right? So anyway, this is likely not the first program you've ever purchased, right? And so even if you're not still with that particular program, you took something away from it. There was something in there that you went, I like that. I thought everything else was crap, but I liked that. So if you've been to YouTube or you bought a book or a trade room or a class or a course or a boot camp or an online event or an in-person event or whatever, there was something you took. It's rare that you bought something that you go, man, that was just complete shite. There was just nothing in there that I liked. That is a very rare thing. What is more likely to have happened is that overall you didn't have confidence in it anymore, and there's the reason for that, right? And I may break out the spreadsheet on you here, but there's a reason why that happened to you, and it was probably less likely. I'm just kind of going out on a limb here, but it was probably less likely to do with the system as it is your understanding of the ebbs and flows. But that being said, and we'll take that to an aside for a second, regardless if you're still there or not, you walked away with something that you put into your personal toolbox and you said, this is something I'm interested in. I liked the way this worked. I didn't like anything else about it, but I liked this particular idea, and that particular idea went into your toolbox of ideas, right? Okay. Now, the next thing you did, you added a tool to your toolbox. The next thing you did, you added a tool to your toolbox. By the time you've gone through 2 or 3 or 4 of these videos, programs, books, whatever, etc., by the time you've done all of that, you've created a toolbox for yourself. Now, what you do, the guys and gals that are most successful in here, take that toolbox of tools and they say, you know what? I like his support resistance levels. Man, those are spot on. They're super cool. The other thing that I like about him is that he teaches me how to draw them, right? He's not just giving me an indicator. He's actually teaching me the whys behind the whats and how to draw them. But I prefer to enter like this. And whatever this is, right? Whatever this is in that equation, that's how you prefer to enter the trade. Okay? Awesome. It's cool. Very cool. Okay? Those guys and gals that do it that way, and then they hear me say, I'm going short at 46.86. I'm not. But if they hear me say that and they go, you know what? This lines up with my cross, my stochastic, my RSI, my, shiny object widget thing that I like to do lines up perfectly with that, I'm going to get in with him. And then when I get in with him, I'm taking it to the target. I'm not going to just peel one off at 10 ticks and let the other one run. I'm going to take it to the target that he's looking for, and I'm going to hold on to it. Putting all of that into a big bucket, that becomes how you become a successful person, because you understand what you're doing, you know why you're doing it, and then you're learning how to hang on to those big targets if that's not something that you're already doing for yourself, right? That is the best and highest use case scenario for what we do in here, and really for any place that you end up. You got to learn how to do it. You got to understand why it's doing what it's doing, and you are applying the tools. We have tools that will help you do it, right? We'll have tools that help you do it and get in if you don't have your own toolbox. But most people have their own toolbox that's suited to their personality types, right? Most people have a toolbox that is suited to their own personality type, and that is the people. Those are the people that are most successful. They have a personality type. They have a toolbox, and they are incorporating what we do in here into that toolbox. Okay. All right, Alex, the problem is, this in my opinion, is that you know very well what's your risk, but you never really know 100% what's your target. That's the reason you don't scale out with a loser, is because you're okay with losing X amount. Yeah, and that's, again, Alex, that's a perfect example of what we just talked about. Alex is basically saying, really, the only thing that we can control is our risk. We don't really know if it's going to make it to the target or not. And so it's the reason that he doesn't scale out of his risk, right? But that is also an argument to be made for not scaling out of your target. The only reason you're not scaling out of your target is because you're not comfortable where the target is going to be, and therefore you get excited. Not you specifically, Alex. The average person gets exuberant when a trade works to a certain point, right? Because they go, you hear the terms like, I need to lock this in. I need to make sure I don't give any of this back. You start hearing things like that, right? And so those are your those are the rational things that you do in your mind to say, I got to get out of this. I got to protect some of this. But you are going to give trades back. You are going to get things. You're going to have trades that go in your favor and then get you out at break even. That's going to happen. But I'm going to do this. I said I wasn't going to do it, but now I'm going to do it to you. You forced me into it. Not you, Alex, but generally here. All right, so let's just go back here. All right, so let me just set this up for us here real quick. Okay, this is a super cool tool. And by the way, this tool that I'm about to show you is part of your membership. It's also part of the extended trial thing that we do as well in here. So you can get a copy of this, and Ray and Dave can talk to you about it if you're interested in this particular tool. All right, so I'm going to reset this. I'm going to go 1-to-1. We're going to win. So basically what this is going to do, let me explain what this thing does. This is a spreadsheet that is going to, what this spreadsheet is designed to do is it's designed, let me come back here. It's designed to take about a month's worth of trades for me, which is 100 trades. It's a little bit, sometimes a little bit less, sometimes a little bit more. But it's going to take 100 trades, and it's going to randomly distribute these trades based upon statistics of past performance that you're going to put into based on your tracking, your journaling, your logging, your understanding of the way your particular behavior pattern in trading goes. Okay, so I'm not going to use actual numbers here. We're just going to do a couple of examples and scenarios, and then this tool also provides you with the ability to do that in your own account, so you can actually figure out what you're doing in the real world and apply it. You can also figure out what you need to be doing in order to be successful, right? So this is kind of lets you kind of randomly distribute trades in actual terms and in forecasting terms. Okay, so we're going to start with an initial equity of $50,000. The risk reward here, risk per trial, is 0.44%. Okay, so my average stop, give or take, is $220. We're going to use the CL as an example. You divide that by $50,000. That is a 0.0044 risk, or 0.44% risk on a trade. Okay, so this is we're also going to say that the commission is going to be $10 per lot. That's going to incorporate commission and slippage. Not every trade has slippage. Commissions aren't $10. So it's going to kind of flow into a number that's going to account for some slippage and commissions. Okay, so we're going to start over here. Here's the historical trade distribution. We're going to start and say that you've got a 50% win rate at 1-to-1, and you've got a 50% lose rate at 1-to-1. Okay, so you're losing 50% of your trades. You're winning 50% of your trades, and when you risk, so you're basically an 11-tick stop on 2 lots, and you're an 11-tick target on 2 lots. And let's roll and see what it tells us here. Okay, so this is just randomly distributed out over 100 trades. While this is running, I'm not trading on the CL right now. We're in this range. The ES is up around the structure target. I'm waiting for a breakout here and more of a trade plan idea, which is up above and then back down through 24.68. I'm going to wait for that. So until there, this is what we're doing. So what this basically says is that you lost $3,500 because your win ratio was 44%. So if your historical win rate is 50%, some months you're going to be better, some months you're going to be worse. In this particular running of the scenario, your win rate was 44%. So you lost $3,500 because you were below your 50-50 win rate there. So let's reset it. Let's run it again. So we go start and run all trials. And let's see what spits out here. This is random, by the way. I have no idea what numbers are going to spit out of this thing. This is randomly distributed, okay? All right, so this time you lost $272, and your win ratio was 52%. So what does this tell you automatically? What is this telling you? 50-50 doesn't work, right? 52-48 doesn't work, right? So 1-to-1 doesn't work. If you factor in slippage, commission, the course over the grind, over 100 trades, 1-to-1 doesn't work, and this is your proof now that it doesn't. All right, so let's do this a little bit differently. Let's have a better average. Let's say we're winning 55% of our Let's say we're winning 55% of our trades, okay? And we're going to lose 45% of our trades. So we're actually a little bit better than 50-50. We're going to hit start. We're going to hit run all trials. And let's see how this thing spits it out, okay? So while that's doing that, okay, so here you lost $703 with a win rate of 51%, right? So still telling you that 50-50 is not, and I'm going to run it one more time at this 55-45, and then we're going to do a couple of other things. So I just want you to get a feel for this one more time. All right, so this thing spits out, okay, $615 profit at a 54% win ratio, right? So you made, yay, you traded all month, and you $2,000, 2 lots and 220 risk, and you traded all month and you made $615. That's what you all signed up for, right? That's what we all signed up for, right? $215 or $615? Okay, obviously not. So let's do it this way. Let's start to make this thing work in our favor now at 2-to-1 risk reward, okay? So we'll come over here, we'll go to 2-to-1 risk reward, and we're going to win. We're going to shift this from 55 to 45 because when you hold on a little bit longer, right? And we're going to make this 50, and we're going to go to break even because that's going to happen to you as you begin to shift this from 2-to-1, from 1-to-1 to 2-to-1. All right, so plug this in. You got a 2-to-1 risk reward. You're winning 45% of your trades. You're losing 50%, and you are at 5% break even. Your win ratio here was 39%, but because you're at 2-to-1, you won $4,300, right? You won 39%, which means you lost 61% of your trades. Even though some of those are break even, you're still in a loss because you get charged with commission and potential slippage and that kind of stuff, right? So 2-to-1, winning 39% of your trades, you're at a $4,200 profit, right? Already that's better than the 1-to-1 at 55% where you were barely squeaking by, right? Now you're starting to talk. Let's move this, though. Let's reset this. And let's take this to 2.5-to-1, okay? And let's go. We're only going to win 35% of our trades. And we're going to lose 55%. And we're going to go to break even on 10%. So now you're losing 65% of your trades, right? So we're going to hit start. We're going to hit run all trials. And let's see. Look at that. My win ratio was 36%. I lost 64% of my trades, and my profit with commissions and slippage, etc., was $6,400. Okay? Now, this is why traders throw systems away. Okay? Let me just look here. Let me find a real doozy here. Okay? We're going to start right here at trade 43, and we're going to run it all the way down to trade 77. So 43 to 77 is 35 trades. Out of that 35 trades, I won 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. Okay? 7 divided by 35 is a win rate of 20%. I lost 80% of my trades during that run. And we said 43 to 77 is, what did we say that was? 25 trades? 30, 43, 53, 63, 20, 73 is 30, and 35 trades, okay? 35 trades right there. So if I'm taking an average of 4, let's just call it 4 a day, that's 9 days in a row where I'm just getting my doors beat in, okay? So if you come to my trading room, right up here at trade number 1 at 43, and you stomached it out for 5 or 6 days, and you saw me win 20% of my trades, you would say, what? This guy's a joke. This guy can't find his ass if you spotted him a cheek, right? He couldn't find it with both hands if you spotted him a cheek. This guy's a joke. However, this was the month where we won $6,400. Okay? Here's the other thing that people do, traders do. They don't understand the system. They don't understand the probabilities. They don't understand the way it performs over the course of the long term. I guarantee you there's not one person in here that bought this new system, this new shiny system out of the box, that doesn't say, this thing sucks. I'm not taking this. This just doesn't work. This system doesn't work. It's broken, right? It's broken. Doesn't work. I got scammed. I got screwed. I got hosed. This guy's a joke. Boy, all of those results they showed me before, there's no way that let me get on the next forum or message board and tell everybody about what a bad experience I had. That's the way this process works. However, that's a $6,400 profit that you're looking at with this run right here. The other thing, if you stick with this program, the other thing you're likely to do, even if you stick with it, is you're likely to tweak it. You're going to add your Ichimoku cloud over the top. You're going to add your Bollinger Bands. You're going to add your moving average crosses. You're going to make them, instead of time-based bars, I'm going to make them volume-based or Renko or whatever. You're going to do whatever to adjust the system. That's what you're going to do, because clearly it's broken, right? Clearly it's broken, not working. And that's just not the reality of it. That's why the only holy grail in trading is asymmetrical returns, holding on for your winners, not, my opinion, not scaling out of your winners, right? Because if you're scaling out of your winners, then you're not 2 to 1 anymore, 2.5 to 1 anymore. Now what you are is now you're 1.75. So in that month where you only win 35%, you're getting crushed. In a month here where I'm winning 35%, I'm hitting home runs. What happens when I get to 50% win rate at 2.5 to 1? What happens then? So I showed you what happens at 2.5 to, or at 1 to 1 at a 50% win rate. Well, let's get me to a month where I hit 50% win rate. All right, 2.5 to 1, and my losses are 45, and my break evens are 5. Okay, so now let's start and hit run all trials. So I showed you what a crappy month looks like, right? Let's take a look at what you take a look at what happens here. Now, I made 21 grand this month with a 50% win rate. I didn't just barely squeak by with $614 or the $614 loss. Now I'm at 22 grand because I figured out how to hold on at a 53% win rate for the particular month. And that's the power of holding on, cutting your losers short, and letting your winners run. And that's where you need to be overall. Do you win every day? I just showed you, you don't. You're going to lose a lot. But when you win, you hang on to the target. You don't mitigate that losing trade. All right, here we are. So that's enough of that. We're 27 minutes away. Hopefully that all made sense, and hopefully that all makes sense, right? Yeah, I will. I actually do have it recorded. I'm recording right now, Mike, and I will. But that is the psychology. That's the importance of the psychology of understanding the system. This is why I say to you, that spreadsheet, if you understand how to use it and apply it, can literally save you thousands and thousands of dollars of hopping from system to system to system. Because what you are doing when you are applying the logic there and you understand your performance and you understand the way that these things work, You do not have to move from pillar to post, as my grandfather would say. You don't have to move from system to system to system when you understand how it works for you and your personality. You understand that drawdown and bad trades and bad runs, all that stuff is going to be part and parcel to the process. So, yep, Josh, you've got 47 up there. You've got 400 resting orders up above you there. We're in the inventory report number now window. We're 25 minutes away. We'll get something done here. We will get something done for sure. All right, so your ES up here did finally break out off your daily structure signal, actually. All right, patience here now. We've got about 25 minutes. Hopefully that all makes sense to you guys, right? That is, and if you're interested, by the way, if you're a guest in here today and you're interested in that spreadsheet, if you're a regular room member, it's in your 9K and 9-day information. If you're a guest in here today and you're interested in that spreadsheet, you thought it was pretty cool, and a few extra days in the trading room, and one of our favorite setups, by the way, that $1,600 trade that we did on July 7th that's on the website was triggered based on the trade that I'm giving you, the setup I'm giving you for $47. That spreadsheet, $47, and that trade rather, $47 plus a couple extra days in the room and trade plans and things like that. If you're interested in that, Dave and Ray, talk to them. They'll hook you up with the link if you're interested in that. And in fact, I'll throw it in here for you. Give me just a second here. If you're interested, like I said, if you see some value in that kind of deal right there, then you can get a copy of that right at this link right here. Let me just type it into the main chat in GoToWebinar. There you go. It's in both places. So if you're interested in that, just take advantage of it. Okay, so let's get back kind of focused here. You're 25 minutes away from the a number here on. Okay, Michael will do that. How do your levels in market structure work with Forex? Again, Forex is a little bit different, Michael, from the standpoint that there's not a discernible open or close, right? But you could modify the measurement of the levels to the different sessions, like the New York session, the Asian session, those kinds of things, and just kind of replot the major levels based on that, right? So you could just do it based on session time. It's just a little bit of a tweak to what we actually do, but you can do it based on session time. Also, that $47 setup is a beast in Forex. Okay, it is an absolute monster on Forex. So it is an absolute monster on Forex. What version of Excel do you have, Ray? A, and B, Carol, that is, not Burke. A and B, sometimes there's a lot of calculations. So if your machine isn't super fast, then yours may be. I'm just giving you possible ideas. You could be on an older version of Excel. Your machine, it's a fairly extensive macro. So you're going to have to, that kind of thing. 2013, it's a fast machine. Okay. Yeah, we could talk about it. We could certainly talk about it. Michael F. Ray's said he's going to reach out to you. You got a private message. Thank you, Alex. Okay, cool. All right, so we're just being patient right now. Lots of time here today. We're about to get into that crude oil inventory report number. Hopefully you found some benefit out of that discussion. I say it a lot. We talk about it a lot, but it really is the truth, right? When you're out trying to do this. So think of one more thing I'm going to tell you. If you think about it in these types of terms, we all want to trade with the idea that we want to make the money that is required, or that money is required, the money that an airline pilot or a doctor or a lawyer or something like that, and these days internet marketer, and some of those kind of folks. But we all want to make that kind of money, right? But the point of that is these guys didn't just wake up and go, I bought a robe, I bought a uniform, I bought a coat, I bought a hat, and I bought one of those flight simulator programs that I play on my computer, right? If, you don't just do that and think you're going to make a ton of cash, right? There's a huge process that's behind all of that. Well, trading is deceptively easy to get into. I put a few $1,000 in a brokerage account. I buy a laptop. I've got an internet connection, and I bought this shiny new book, program, video, etc. And then you sit down and you promptly, maybe it works great for 2 weeks. You're like, man, this is easy. Or you're in the simulator and you're trading 15 lots, and you go, man, with this system is killer, man. With 15 lots, I made $1 bajillion. Well, are you really going to trade 15 lots? Probably not. So you've already started down the path of a bad thing. You're not trading anywhere near what you would do realistically. So you're not getting the feel even in the simulator. You're not learning what's happening. And so that education process where you spend hundreds of thousands of dollars to become a doctor, you're starting down the path of spending a bunch of money on education and programs and things like that before you get spit out on the other side and go, oh, this is actually hard. This is work. I have to do things here to be able to make money in the way that I want to be able to do it. And it's right. It's just like anything else. If you want to be an airline pilot, a doctor, a lawyer, a CEO, a hedge fund manager, whatever, you want to do all these things, you got to put in the work. You got to put in the work. And then sometimes, even when you do put in the work, it doesn't work, right? So how do you understand how your system is performing? So how you understand how your system is performing and all of those different types of things is really relevant to your long-term success. And that particular tool will go a long way to helping you understand